Hi, my name is George Dagnino. I'm the editor of the Peter Dack Portfolio since 1977. More information about me can be found on www.peterdack.com. Today, I'm going to talk to you about markets seasonality. Markets have a very strange pattern depending on the month of the year. They're not reliable, but they're useful. It's very important to know, and you can make good money if you're aware of it. This is a very well-known seasonality of the stock market. The market, buy in May and go away. Stocks go up. Most of the money is made from January to May. Around April, you have to be careful. Then the market doesn't do anything until October, and then October, November picks up again. Again, sell in May and go away. But what is interesting that the other markets that I'm going to show you next have you can take advantage of other seasonalities during the period that is quote unquote unfavorable for the market. I'm using copper as a representative for commodities in general. I am a strong believer that commodities move in the same direction. There is no one commodity that goes in one way, others go in the other way. But anyway, the copper has this seasonality. Beginning in January, February, commodities tend to rise around May. Then from May until, follow the green, by the way, and red line. Then between May and October, November, they don't do anything. And then they pick up again, commodities strengthen towards the winter months. This is a very important pattern because, again, from the period between May and November, commodities, as the stock market, tend not to do much. However, this is good news for another market, which I will show you later. This is the seasonality of gold. Again, concentrate on the red and green line. Those are the seasonality. Notice how, like commodities, gold is strong until May, is weak until September, October, and then resume its rise in the winter months. Again, strength until May, like the stock market, weak and all the summer months, like the stock market and commodities in general, and then picks up its strength again. Now I'm going to show you how you can take advantage of this seasonality. To understand this chart, you have to remember that when commodities rise, it's bad news for the bond market. Okay, remember that concept, which, by the way, ties to other things I've said about the business cycles. But again, this is not the place to talk about that. So, but remember that when commodities rise, it's bad news for the bond market because sort of inflationary. That's how you can explain it. Now let's talk about bond price seasonality because it's a very interesting way to make money in the summer months. If you recall, in the winter months, that is beginning in January, commodities prices rise and gold rise. But look what happens seasonality-wise to bond prices. They decline. See, bond prices decline in the winter months. But then in the summer months, when the stock market and commodities don't do anything and you don't know how to invest the money, look at what happens to bond prices. They go up in the summer months until the winter months. Then in the winter months here, around December, they start declining again. So this seasonality gives you an interesting investment strategy if you think about. In other words, in May, you sell the market around April, May, and you buy bonds until October, November. And then you go back and you buy stocks and commodities. Just food for thought. I found this very, very interesting. In fact, I found this seasonality in bond prices when I was managing roughly $4 billion in interest rates derivatives. It's a very useful thing to know. Thank you again for reviewing this video with me. Again, seasonality is not the ultimate indicator, but again, it's one of those pieces of information that is useful to know and keep in your arsenal. And quite frankly, it is a very useful and shows some quite interesting performance record, both in stocks and bonds kind of strategy, including commodities. Again, thank you very much for reviewing this video, and I hope to see you soon. So long. Bye-bye.